Mortgage demand drops as rates remain stuck at 6.52% for over a month, costing buyers a shocking $12,000 in extra interest payments. This video is designed to help first-time home buyers understand the current mortgage rate landscape. You will learn about the factors influencing mortgage rates, how to navigate the rate stall, and strategies for making the most of the current interest rates. Specifically, you will learn about the impact of the rate stall on loan demand, how to calculate your mortgage payments, and what to expect in the coming months. What is a mortgage rate update? A mortgage rate update refers to the periodic changes in interest rates offered by lenders for home loans. Currently, the rates are stuck at 6.52%, which is 0.25% higher than the same period last year. This translates to an extra $125 per month on a $250,000 mortgage. How does the rate stall affect loan demand? The rate stall has led to a decrease in loan demand, with a 10% drop in mortgage applications over the past month. This is because higher interest rates make borrowing more expensive, with the average borrower paying $2,500 more in interest over the life of the loan. What strategies can first-time buyers use? First-time buyers can consider exploring alternative loan options, such as adjustable-rate mortgages, which offer lower interest rates for the first 5 years. They can also look into government-backed loans, which often have more lenient credit score requirements and lower interest rates, with a 4.75% interest rate for a 30-year loan. How to calculate your mortgage payments? To calculate your mortgage payments, you can use a mortgage calculator, which takes into account the loan amount, interest rate, and repayment period. For example, a $300,000 mortgage with a 6.52% interest rate and a 30-year repayment period would result in a monthly payment of $1,923. What to expect in the coming months? In the coming months, we can expect the mortgage rates to remain relatively stable, with a possible 0.25% increase by the end of the year. This means that borrowers can expect to pay an extra $50 per month on a $200,000 mortgage. It's essential to stay informed about the latest mortgage rate update to make the most of the current interest rates. Click the link in our description to learn more about how to navigate the current mortgage rate landscape and make the most of the current interest rates. Don't forget to subscribe to our channel for more first home buyer tips and stay ahead of the real estate news.